On a decidedly interesting day, we were talking the last couple of sessions,
kind
Carol
of a nice
Master.
person on most days.
Most days,
Yeah.
I don't know.
Not every day.
Not on odd number days. But
That's
when we
true.
talk about this idea of the calm that has swept through this market, and a calm being broken today, though volumes are light, but stocks down significantly.
Yeah, and I guess Tim keeps like beating me up here because he's like, I'm like, but Tim, look, we're seeing actually some buying in the last few minutes of the session. And you know what? Just when you think maybe 2.2% lower on the S&P is kind of a bummer, check out the stocks. It's down 4% today.
Yeah, it was down worse earlier.
Sock it to
It's
me.
off
Yeah,
its worst
down
levels of
about
the day.
7%.
But look, if we
worse.
talk about crucial moments of the day, I think it's none other than hearing from Jay Powell a little earlier, and specifically the concern that he has about what the Fed would do in a stagflationary environment, but also that the tariffs, as they were rolled out, were bigger than expected, which means they could have a bigger effect than expected.
I feel like they need to do what United did and give two different forecasts.
Exactly.
The base forecast and then the bearish case.
Yeah, I mean, the problem, though, is it's so confusing, right? We talk about this idea that a few days ago we were talking about this exemption that Nvidia likely had with regards to those H20 chips. And then basically it's not an exemption. And then we get effectively a warning that they're going to write off $5.5 billion on this. I don't even know what you can even put out there with confidence.
Yeah, well, welcome to our world. Uncertainty.
All right.
Hashtag.
Well, we get the closing bells here in New York, and it is red across the screen. An S&P 500 lower by more than 100 points. Looks like it's going to be a drop of roughly about 2.2%. And we were much lower than that on the day, but nevertheless a close below that key 5,300 level. The Dow Jones Industrial Average dropping about 700 points or 1.7%. The Nasdaq indices, of course, that is your biggest drag here, largely because of the weight that we saw from Nvidia and the rest of the chip stocks. The Nasdaq Composite and Nasdaq 100 each down about 3%. And the Russell 2000, that's your relative outperformer, lower by 1% on the day.
All right, quick check on the S&P 500, and we're going to get a little bit more on this, but pretty broad-based in terms of the selling. Scarlett, we had 436 names to the downside, 66 to the upside, 1 unchanged.
All right, let's take a look at the IMAP. It should be pretty straightforward here. A lot of red, and most of it dominated by big tech sectors. Tech and consumer discretionary and communication services all down by at least 2.5%. The outlier here is that thin slice in the upper left-hand corner. That is energy stocks gaining 0.8%. By the way, they are the worst performers since April 2nd, still down about 15%, but they are moving higher with oil prices.
All right, guys, guess what stock I am glued to as we speak?
Your gainers today?
Yeah, it's a huge gainer.
Hertz?
I'll give you a guess. It's on the screen right now. That's the hint.
I just keep watching it. It's up about 52.
Man, I had a 1 in 3 chance of getting it right.
Well, hey guys. All right. So Hertz is up 56%. We saw some big movement to the upside in the last, 20 minutes or so, 15 minutes? Unbelievable.
Yeah. Why?
Why? Well, we know the backstory because it's been higher all day today, but we did see Pershing Square Capital Management revealing a large stake in the company. It's had its woes big time, no doubt about it. Bill Ackman's firm buying 12.7 million shares, valued about $46.5 million at the time of the purchase. That was a filing today, making it one of Hertz's largest shareholders. So we know they've been working on revamping their fleet, doing a lot of things. Looks like Bill Ackman wants some changes as well. So I don't know. I'm just kind of glued waiting for maybe a headline to cross, but we're just going to have to wait.
The volume is amazing here, 58 million shares, and on average, it trades about 7.8 million a day.
Yeah, so a lot of activity, right? Just seeing it in a big way. All right, another gainer, Abbott Laboratories. Should we go to earnings, or do you want me to continue?
I'll just pick up here. We are getting earnings out of CSX, of course, the big railroad operator. On EPS for the most recent quarter, it did look like a miss. 34 cents a share. The street, on average, was looking for 37 cents a share. Revenue also coming in a bit light, $3.42 billion. The street was looking for 3.46. I need a little more time to dig in to see if there's any real commentary here on tariffs, as well, of course, as some of the issues with regards to economic conditions. But the share is lower by 5% in the after-hours trade.
I will say the President and Chief Executive Officer, Joe Hinrichs, saying CSX faced operational challenges to start the year, which contributed to first quarter results that did not meet our expectations. So a little bit of commentary there.
So macro, not, or micro, not macro. These are unique to this company. So
right.
Operational, not negative on the economy.
Which it'll be interesting to see what they have to say, though, maybe about the economy. Still, though, CSX down, bouncing around here, unchanged, but we did see initially a big drop here. All right, I'm going to go back to gainers, if I may. Abbott Laboratories, folks, up more than 6% at its highs, finishing the day with about a 2.7% gain. CEO Robert Ford saying during their earnings call that the company expects a 2025 tariff impact of about a few $100 million. So I guess investors were like, maybe they can deal with that. Companies also making some new investments in U.S. manufacturing here in the United States with the impact of tariffs on medical devices and diagnostics looming over the industry. So they're going to spend about $500 million on 2 facilities located in Illinois and Texas. I should say with earnings, they reaffirmed its annual guidance and reported adjusted EPS that were in line with Wall Street estimates. And then here's a smaller market cap company. It's a grocery company, $1.4 billion market cap. It's based in California. We're talking about Grocery Outlet Holding. It was up 5.3% at its highs, up almost 11% today, but still closing with a 5% gain. Being raised to buy from hold at Jefferies, which says the company's defensive positioning as a low-price grocer could fuel outperformance amid economic uncertainty. So there's the U word.
Okay.
I just want to just real quickly go back to Hertz, because a viewer actually wrote in. He was saying to look at the short interest. I didn't realize how many short
It's
shares.
crazy.
Yeah, it was so
like 45% or something like that?
Yeah, 48% based on Bloomberg calculations, and that was as of yesterday, coming into today's session.
So this is a violent short covering rally then?
Potentially, yeah.
Yeah.
All right, certain outlier today in today's trade. I want to go to Nvidia, the one that really started things off on the downside today after we got that news late yesterday that the Trump administration has restricted the company from selling those H20 chips in China. It'll cost the company billions of dollars and affect its product line, down 6.9% in today's trade. At one point, it was down as much as 10.5%, but it came off of those lows. The restriction will impact NVIDIA's revenue with estimated write-downs of $5.5 billion. It could affect other chip makers too, which is why we saw AMD fall today. Samsung and SK Hynix could be affected as well. And staying with the semiconductor space, I want to look at ADRs of ASML because this is actually a tariff story, not a restriction story. Those shares fell 7% today after the company reported first quarter orders that were almost €1 billion less than expected and warned it doesn't know how to quantify the impact of recent tariff announcements that has threatened to upend the semiconductor industry. The company outlined potential risks from U.S. tariffs, including additional charges on shipments, and said it has no plans to move production to the U.S., but it may pass on some tariff costs to customers. And finally, the company that reported after the bell yesterday, J.B. Hunt shares falling 7.7%. The company reported revenue in multiple segments that fell short of consensus estimates. It did beat expectations when it came to intermodal, and first quarter profit came in above estimates. Analysts, though, pointed to continued concerns about the impact of tariffs and, of course, the broader economy. We saw price targets cut at least 3 firms that followed the stock.
All right, let's take a quick look at yields because the volatility there did continue here. Although we did see a little bit of a flip-flop from what we had seen a little bit last week, this time a drop in yields of about 7 basis points on that most rate-sensitive, Fed-sensitive part of the curve on that 2-year, down about 7 basis points. On the longer end of the curve, you're only looking at a drop of about 3 basis points. But look at those absolute numbers here, 3.7, 3.9, 4.2, 4.7, and that gives you a sense here as to why some folks are in the other asset classes are being rattled.
Yeah, although there must be a relief among market participants that at least we're going back to a traditional risk-off dynamic where stocks are down, the dollar's down, but bonds are higher, pushing yields lower, right? Because for the last couple of days, we had seen this odd and concerning situation where everything was going down at the same time.
I thought about that exactly. I mean, it's kind of crazy, right, with all this uncertainty out there, but to see that it's kind of normal in terms of the way the markets are supposed to work, because when it doesn't, it really raises some questions about what is truly going on here. But I keep thinking, I just want to get more earnings and see what companies have to say and see if anything's holding up. Or
so does that mean Netflix, it all rides on Netflix tomorrow after the bell? Is that the true test? Are consumers pulling back on Netflix? Are more people going to the cheaper tier option where advertising is offered?
Yeah.
What's the concern?
Well, I mean, the only problem with Netflix is that going to be as much of a barometer, a broad economic barometer? I mean, I feel like it's such an outlier. We can remember tomorrow we get, some healthcare names like United Health and I think a few other banks, regional banks, as well as D.R. Horton and some others. So maybe that'll be a better representation of where economic conditions are at. Because I don't know about you, but I don't even know what the heck I pay for Netflix anymore. It just gets charged to my credit card.
It's a utility essentially for a lot of people.
They could be charging me $50 a month.
You have people who take care of that for you, right?
Huh? No. I do everything myself.
No, but I agree. Listen, the more the merrier is how I'm kind of feeling, because I just think we want to hear what these guys have to say, what kind of visibility they have. Do they do what UAL did? And
you know what I did? I actually got rid of 2 of my subscription services.
Which ones?
Which ones? Yeah.
Am I allowed to say on air?
Yeah,
I got rid of Prime.
I said it's okay.
I got rid of Prime.
Okay.
Also, no more free shipping for you.
Yeah, well, that wasn't much of an issue for me. But and then we never watched the Apple one. We watched Severance on that, or what was it? Not Severance. Severance, yeah, that was it.
Or you know what? You'll just flick it back on when
That's what I
the
was
new show
gonna
comes
say.
on. That's what
I
everyone
thought he got
does.
rid of Bob.
Or maybe
to
Scarlett can
Peacock.
share her
Peacock?
memberships with
You're not
me. I mean,
watching
she's got them all,
Housewives anymore,
Apple.
right?
I do. This is an
Costco.
investment for me.
Just
You know.
Romaine, I'll order all
Polo
your stuff
Club.
to be delivered to me, and I'll bring it to you.
Thank
okay?
you, Tim.
You got it.
Yeah, Scarlett's fancy. She just tries to downplay it.
Are you done?
No.
All right, we got a wrap. All right, guys, it is a wrap on this Wednesday. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We have fun. We get through it. We will see you again, same time, same place tomorrow.